Alright, I want to be talking about time and price, how we actually use time and price, and let's go in more depth about time and price and candlesticks and all that. Right, so first things first, how do candles operate? A bullish candle, right, is open, low, high, close. Bearish candle is open, high, low, close. Right, so how does this look in a candlestick? Right, so we get the open, so we have the open here, right, open, so we'll do a bullish one first. So we open here, low, right, this low, right, as it's like that, our high, make our high, right, then we come back, and then after we make a high we close, right, so just close anyway here, right, so open, low, high, close, right, so this is your candlestick, right, so let me quickly, I'll make it look better. So bullish candle, this is a bullish candle, so open again, we open, we make the low, so this is the low, right, then we expand, we make the high, so now the candlestick as it's printing is looking like this, right, makes the high, as we're making the close, so it's about to close, the candlestick will come back down usually, and then that high is there, right, just like that. And the same thing happens opposite, so we open the candle, right, open the candle, candle makes a high, candle makes a low, and then candle closes, right, just like that. So again, using the same, I guess, graphics as that, so open, we make a high, right, so the candle's looking bullish, whatever, then comes back down, right, so that becomes a wick, we make the low, right, so for the bearish candle, so we made a high, we're going to make a low now, then we retrace back up, and that's your bearish example, right. For those that know ICT and whatnot, this might look like your power of 3, your AMD, which it is. Accumulation, right, manipulation, distribution, right, so that's for a bullish, right. Now if we use our candlestick, it's the same thing, right, so let me quickly, accumulation, manipulation, distribution, right, something like that, and that is your same as a bullish candle. So again, we have the open, right, open, it's opening, blah blah blah, it's ranging, lack of volatility, everything's fractal, right, we have the open, then we make the low, right, and this is where this is also your candlestick, right, so for bullish candle, what happens? Open, right, we open, this is that opening candle, right, this is how the candle's forming as we do this, open, low, creates a low, just like this, right, then this low is your manipulation, right, this low becomes this, as the price becomes bullish, right, then you might get a bit of a sell-off, right, which is your high being cemented and the candle closing. Now that is a bullish candle. Same thing happens in a bearish scenario, right? Now if we know how this operates, we can know how our candle, our daily candle, our weekly candle, and our monthly candle, and so on, operate also, right? So we've got that there. I'll leave that there for now. Make this bit smaller. 28's a bit too big. We'll go 16, right? Now, let's talk about it in a weekly context. 1, 2, 3, 4, 5. I might not need this actually. 1, 2, 3. Yeah, probably don't need this. Alright. So, Monday, what do we usually say? Monday has a lack of news. So, lack of news means lack of volatility. So, this consolidates. We usually say Tuesday or Wednesday, cement the high or the low of the week, right? So Monday range gets taken out. So Monday's ranging, right? Tuesday we might have a news, right? Take out all the lows, push up, we create the low of the week, right? And now, so something like that, right? So again, we have the accumulation, manipulation, and the distribution, right? As that's happening. So as this is happening, a lot of people are going to think of this as a break of structure, and they're going to try shorting from a supply or order block or a fair value gap, and they get stopped out because they lack higher time frame narrative. This is why it's very important. As you see the candle forming here, right? So if the candle was forming, it will look like this. Then you get that push down, right? And this is where a lot of people think it's bearish, right? This is where a lot of people, think it's bearish. So what? They start shorting here, just as we spoke about, or here, right? Then what happens? This actually creates the low of the week, right? So low of the week, right? When this happens, price rallies back up, right? That low of the week is cemented, and we have a bullish week, right? Then we might get a bit of sell-off, right? That is usually, so as price gets set, retraces lower, that is usually your TGIF, so that retracement, alright? But that, and then the high of the week, so that everything happens inverse too, right? Same thing, so that'll be the high of the week, right? They'll still be, it's still the same, right? It's still the same, right? But that is usually why we say Monday we don't really trade, right? Monday, because you're not really going to be catching much, right? That's why I always say low-hanging fruit, push down, right? Accumulation, manipulation, this is the manipulation, and this can happen on Wednesday too, right? Wherever there is news, right? Whatever our bias is, right? We come with that conclusion. This isn't always going to be perfect like this, right? It's never actually going to be perfect accumulation, right? Like equal highs. It's not going to be what a lot of you guys think it is, right? So it's not going to be this, right? Let's be real. It's not going to be this. And then Tuesday comes, takes all these lows and skyrockets, you caught the bottom. No, not really, right? Stop thinking that. But that's our, that's how the market kind of moves, right? Open high, low close, or open low, high close, right? So if we know this in a higher time frame narrative, if we know if we are expecting bullish price action, is that not where you want to get involved, right? Is that not where you want to see the manipulation happen, right? Take out all the liquidity here. Because again, if you trade SMC, you need to kind of believe the concepts, or you'll never actually confidently execute, right? If you don't really believe that all these are, being accumulation for, the banks and all that and this and that, then you're not really going to trade and believe your concepts. So you need some sort of belief in your concepts, right? That belief adds that confidence too, right? So that manipulation is where you want to get involved. So after it manipulates, takes out the lows, and we get that expansion, you want to enter on the expansion. And as you can see, right, I'll go in, in details later, that manipulation, so the expansion, right, you want to see in all time frames, right? So, and this usually you want this to be in a, maybe a fair value gap, right, or something, right? Depends on what you're using, right? How fractally you're actually doing this, right? So I hope that kind of makes sense. And if we use time on our side, again, time is just volatility, right? So time is volatility. If I can spell that right, I hope that's right. Doesn't matter, right? Time is volatility. So this thing happens across all time frames, and the market is fractal. So tell me, if you can master these concepts, right? If you have a mental understanding on how this manipulation works, you are at a very good state in trading, right? So now let's look at this, right? I'll put the daily divider. Is this one? I don't want to overcomplicate it too much. Monthly open. Don't want to complicate it too much. Give me a sec. That should work. And I'll go in the 2 hour or something. Right, there we go, perfect. I'll delete this. Right, so again, Monday, what do we see here? Nothing really. Sure, we got news, yeah, a bit of volatility, whatever. But this high, right? Monday barely makes the high or the low of the week, right? Unless there's huge news, right? But usually it does not. You know what I mean? So if you can just understand that Monday and Friday have a bit of low probability days, right? That's where you can know when to stay out. So here, Monday, as we spoke about, a lot of people would see this as a bullish day, right? Why? Because what does it look like in a candlestick, right? It just looks green. So they would assume that's bullish. However, Tuesday comes with news, right? As you can see, news. This is your manipulation. So accumulation here, manipulation there, right? Then, as we take out all these highs, we go down lower, right? We push down lower, right? Because we've done the accumulation part. Now we're doing the manipulation, right? Taking all these highs, we're expanding lower now, right? So this is your PO3, your AMD, all that, right? Right, it's cool how it works, huh? So, and that usually, right, so we have these and these, so we have pretty much equal highs here, right? Is there anything we could go from the weekly that makes sense, right? What do we see here? So it taps into a weekly fair value gap, right? It taps into a weekly fair value gap there, and what do we have below us? Another weekly fair value gap, right? So let's go to the 1 hour again. See how well it works? Again, that weekly fair value gap, we don't use it as a area of reversal, right? Not always, but if it makes sense, it makes sense. So we've reached our target. Where is our next target? Our next target is that weekly fair value gap below us, right? So this line here, I'll just redo it, right? So weekly fair value gap, right? I'll delete this. I'll also make my own line, so it might help you out. So Monday, right? Monday, all right. Let me delete this. All right. So here, Monday, again, Monday, nothing happens. All right. So again, let's draw it out again. Monday, nothing's happening. Right. Ranging, whatever. Tuesday, we make the high of the week. All right. We tap into the weekly fair value gap. we push down. Where do we push down to? The weekly fair value gap, right? Which is this line here, which I will draw again. Alright, so again, with this candlestick, how would it look like on, just like one candlestick again? So we have the range, so we have the open, right? Blah, blah, open. Nice. But as we get the push higher, a lot of people are assuming it is bullish price action. No, that push higher is just making that wick, right? So it pushes higher, taps into the higher time frame fair value gap, right? So let's do this. Then after it taps into it, we get the immediate reaction. Then the reaction is bearish, right? So now this candlestick, instead of being bullish, it is now retracing, right? And then it will create your low, right? So I'll try making it a bit better actually. That, I think that made sense for you guys. So again, so bullish price action, whatever, right? We open or whatever. Open, we create the high, right? Then that high creates the low, right? So it'll be like that. Then retrace a bit, then here, right? So it will be looking like that as that is forming, right? So that is how we can use time and kinda our power of 3 and accumulation, manipulation, distribution, all that with our context, right? And this works on multi-time frame. So this works on whatever time frame you guys want to work with, you'll work in that. Alright. And you still get the entries as we spoke about. 1 hour fair value gap. 1 hour break block overlapping. Because our drawn liquidity is still there. Even though it might not be, picture perfect, like, how you see in diagrams and all that, it still helps us create the bias that where price might go. Alright. So I hope that made sense. I hope that kind of, helped you guys out with time and, with the weekly profile and this and that, right? So, yeah.